Hey guys, 4th of Jan today. Happy New Year to you all. I know it's a little bit late, but the last video I did was just over a month ago. So yeah, it has been a while. But yes, another very important time in the markets, I believe. Obviously, we've been pretty much going sideways for the last couple of months now. But I believe the bull has woken up once more and we are about to start moving very, very quickly. So I thought it was a very timely video. I wanted to get my views out there. So let's dive right in. What can you expect in today's video? So ultimately, we'll quickly talk about the overall target, the long-term target, probably the 2025 target, which is around 200k. It can obviously be fine-tuned further down the line, but we're looking at a bull run going into approximately that kind of level. Okay. Invalidation is also going to be key in this move. Where do we draw the line? Well, what price do we not want to see price come under? And then where could we maybe find some resistance along the route? And yeah, reasons for why we are bullish, of course. So a few key topics to be discussed in this video. So we're going to go through Camarilla pivots, incredibly useful technical tool, overlooked by many, but absolutely key to my analysis. Then also, I want to throw out some RSI. A lot of people think we're probably overbought here and maybe even due a crash. I can understand when we consolidate like this for a long time, people start losing faith and they wonder what could possibly happen here. Could we actually capitulate? And I'm going to talk about how that doesn't really make sense. I mean, smart money have decided that they want to take this market higher following the result of the election. And are we in overbought territory following that breakout? Well, the RSI would tell you otherwise, so we'll address that very briefly also. Next thing I want to discuss is right now, the greatest opportunity is in altcoins, okay? That can be explained by the Bitcoin dominance chart, which I've been following for a very, very long time and been tracking this to see when we might see money transition from Bitcoin into the alts. And I'll be demonstrating this to explain why I think altcoins carry the greatest opportunity right now. So that's that really. These are the key points to discuss. There's also a little bit on the Dow Jones here. This setup here goes all the way back following the Great Depression. We've been following one big trend for a very long time, and we are close to getting to the point where there's not really much upside left on the table and no real reason to keep throwing money into the markets. But there's still at least a good 6 months of further astronomical upside, I believe. So again, silly for things to capitulate at this point. So we'll maybe give that a brief moment towards the end of the video. So let's begin. So Bitcoin here, we've got the daily chart. So quickly, I will go through the long-term count. I'm going to scan through it. I'm not going to give you hours of justification because obviously there's a lot to discuss in this video. I've gone through the long-term count many times before. We're on the log scale. Obviously the price therefore very squashed, but this is our wave one. Let's come off the log scale and you can just kind of appreciate it a bit better. So there's your wave one. There's kind of no questions about it. Or 1, 2, 3, 4, 5. Nice 5-wave impulse. Clearly a nice corrective pattern to follow. Nice wave 2. Wave 3 again, very clear. Can't really argue it. And then the fourth, this is where things can arguably, you can have different counts. You could say it finished here. But in my opinion, judging by the subsequent wave count, I have this as being a symmetrical triangle here, finishing at this point here. And again, it gets even more complicated following here. I actually have the wave 5 as being an ending diagonal because I have this as a 3-wave going up. Okay, ending diagonals, don't forget, end in a 3, 3, 3, 3, 3. So we've got 3 up, 3 down, 3 up, 3 down, 3 up to continue with that. Why I've not just pulled this randomly out the bag, this ending diagonal. It's actually also playing out on the Dow Jones also when we look at that closely. So all starting from the COVID March 2020 decline here. This is where the ending diagonal starts. The first, the second, the third, the fourth, and the fifth to follow. So we're currently on the third wave, both on Bitcoin and on the Dow Jones. As I say, I'd love to go into this further and spell it out in more detail, but it would drag the video on way too long. So, but you could try and find it in previous videos where I go into it in a lot of detail. So yeah, let's get back on this log scale so we can appreciate this larger Elliott wave count. So major wave 1, 2, 3, symmetrical 4, and then the 5th where it's getting quite convoluted, and we're making what I believe is this ending diagonal. So we've made our first, the second, the third, which, as I say, should be a double 3 to the upside. I believe we've had the first 3 in. We then had a big pause, you know, for 1 year as we wait for that US election. And then I believe we're going up in another 3 waves, similar to that kind of 3-wave move. We've got another 3-wave move to go. I think, to be honest, the first leg could very well have been in. We've had a considerable 2-month pause here, and I think we're going to get on another big leg up to complete that, going into around 200k. I'm looking for it to meet the upper median line of this pitchfork, which so far is following very nicely, and finding confluence with the trend line connecting the previous major highs, as ending diagonals often do. So yeah, that's it in a nutshell. I don't want to spend too much time going on the major count, and obviously we can fine tune this as time goes on. The 200k, it's unlikely we're going to hit it to the T, you know, and we can fine tune that nearer the time. Another more simpler way of looking at it is that's corrective, and we're waiting for an impulse to follow. We've obviously got a pro-crypto president on the near horizon. Every reason for us to absolutely fly. We're going to get a pro-crypto head of SEC very soon. Every reason to fly, so why not just follow an original pitchfork to the upside and look for at least the upper median line or upper warning line to get hit. That's another very valid way of looking at it as well. So that kind of ignores all the Elliott wave count that we've given prior, and that's just simplifying things, and I think it's another very valid way of analyzing the chart. So yeah, Elliott wave not always essential. It's a key part of my arsenal in terms of how I analyze the charts, but it has its limitations, and I want to address that in a bit more detail on the lower time frames. So 4 hourly, let's get back on it now to look at these lower time frame price action. So I think my last video was when we went into 100k. Jim Cramer said Bitcoin, everyone needs to buy Bitcoin. It then crashed 10%. Yeah, and I made that video by the dip, and since then we've just gone sideways. So basically, in a nutshell, we've had a year of consolidation. Everyone concerned at this point, are we going to capitulate, are we not? US election was the determining factor. Once we had that result in, markets absolutely flew, especially when Trump made it very clear cut that he was pro crypto. And yeah, so we've flown. Okay, now obviously we're just cooling off a little bit, waiting for the next major catalyst, which would the most clear-cut thing for me would be either a change in the head of SEC, which is due, I believe, 20th of January, or the inauguration of Donald Trump, which again, 20th of Jan. So I don't expect any kind of major breakout until that 20th of Jan, but we can certainly bottom out before that. And yes, we're likely to see a bit of volatility. I mean, this next week in particular, we can expect a lot of volatility. So over the next week, the 7th of Jan, 8th of Jan, 10th of Jan also, we've got economic catalysts. So we've got services PMI on the 7th. You've got the Fed meeting on the 8th. And then on the 10th, you've got non-farm payrolls, but the more significant thing is Trump getting sentenced. Yeah, and they've made it quite clear it's very unlikely to be anything like a jail sentence or a fine or even probation. They're talking about this kind of unconditional discharge, which is basically like a slap on the wrist. But the significant thing really is the label behind it. It allows the media to kind of hype it. It's also going to affect, no doubt, to some extent, the Republican office nominees that are due, obviously, in the next couple of weeks, I believe. So people will argue, is it a political stunt? Who knows? I'm not going to get into that. If that's politics, all we know is that we're going to get a pro-crypto president on the near horizon. So as far as I'm concerned, it's bullish for Bitcoin and crypto. So yeah, as I say, we've had that pause. I believe it's just pausing now, waiting for that result, not result, but for Trump to take office, and then I think things will start moving a lot faster. But one of the key points here is this pitchfork. Yeah, one of the key points I wanted to point out is this pitchfork. It's strong, okay? It's holding the price action very nicely. We've not even dipped beneath the low median line. There's really no reason for concern here. We've kind of consolidated for a good while, but this is my invalidation point, by the way. It's not the true invalidation of the trend. The true invalidation of the trend would be the lower warning line. If we broke that, the trend is gone, okay? But if we were to break the lower median line, I would lose quite a bit of faith in the market. I'm not saying I would suddenly flip bearish, but it's a point where your bias, or at least my bias, would have to be flipped to some extent. I'd lose faith in the bullish argument. So the way I play it is, and the way I've mentioned it to the group also, as price comes, if price were to come beneath this low median line, I'm out. I take everything off the table. But as soon as it gets back above, everything goes back on. Okay, it's as simple as that. So it's just a damage limitation aspect here, and I always like to have that in trading. Obviously, your kind of invalidation point. So that's mine. It's obviously a dynamic line. Will change with time as it goes higher and higher, being a trend line. But that's the level I don't want to see us come beneath. But as long as we're above that, all is good. All is good. Stock market's all looking healthy. Yes, the last month they've had a bit of weakness, which again can be expected as we still waiting for that kind of transition between our presidents in the US to unfold. So yeah, and we're only going to see more volatility over the next couple of weeks. It's undoubted. There's economic catalysts, as I've mentioned. We've got the sentencing, and you're no doubt going to get loads and loads of media coverage, which ultimately influences the market significantly. So that's the major pitchfork that we're following. So yeah, I did want to mention, so over the last couple of months, the Elliott wave count here is incredibly ugly. And I would essentially throw Elliott wave out the window for analyzing this. You're only going to drive yourself crazy. There will be those kind of Elliott wave veterans or those Elliott wave experts who say, no, hang on, this is the count. They spent all day looking at it and this is definitely the count. The thing is with Elliott wave, I used to be one of those guys that would do that until I realized Elliott wave is a tool and it's not the be all and end all and the only thing that the markets adhere to. And if it's not glaringly obvious what the count is, it's pretty insignificant. Okay, and here is a very classic situation of where the Elliott wave count is not particularly glaringly obvious. You know, we've had 3 waves up, 3 waves down. You can make some sense of it. You could put some labels on it, but there's more important things. There's more important weighting of more other tools that are more important. In particular, fundamentals, trend lines. I'll come to Camarilla pivots in a moment. All of these things are giving much more glaringly obvious setups. So there's no point hanging on to Elliott wave just because it's what you know best. And then trust me, I love Elliott wave and I will use it where possible. But sometimes you have to accept it's just not the best tool for the job. And this is one of those situations. I mean, the same thing happened back here before we broke out of this long consolidation and then we had the election result and broke out. There was this scenario. This is not bullish. Okay, this is, well, it's not impulsive. There's no impulse here. This is not a 1, 2, 3, 4, 5. Okay, this, even that move to there is not a 5-wave move. It's 3 waves. Okay, there's nothing impulsive. Yes, you can try and force some kind of leading diagonal or some kind of truncation. Maybe the downward trend truncated here and the bull trend only started here. You can argue, you can make up all sorts. You know, Elliott wave goes on and on. They make all sorts of caveats the further you dive on into it. But as I say, if it's not glaringly obvious, ignore it. And this, I mentioned to my group at the time, just ignore the Elliott wave here. It's not the best tool to use. And there was a lot more useful indicators that we could follow and predict the ultimate breakout to the upside. And again, same is happening here. So yeah, that's key point I wanted to put out, Elliott wave, not particularly important here. Yes, this is one big consolidation. You could probably force various Elliott wave counts onto it, but not particularly important. So next thing I want to address is the Camarilla pivot. So we're here on the monthly time frame, and basically Camarilla pivots here. Notice every single one during this year. So on the monthly, each period represents a year. So the period represented by these brown lines for the R4, the R3. These are resistance lines, support lines, the S3 and S4. So all of them during the year of 2024 finished with a close above the R4. It was an incredibly bullish sign. And I was waiting to see how we would get with that November election. Is that going to give us our first candle close beneath the R4? But it wasn't to be. As we got closer and closer, it became more apparent that this was going to finish very, very bullish indeed. And so yeah, very bullish finish to 2024. And I believe this is just going to continue now. Now there is, I don't believe the R3 for 2025 is going to act as significant resistance, because we've already come pretty close to it already at 108k where we topped out recently. But this level, 132k, is a level just to be aware of. I think we could have a little bit of a spell of resistance in and around that point. And I'll come to that in a moment. It's kind of giving confluence with our pitchfork median line. So that's very key. A key level to look out for. Will we kind of dip down into the S3 or S4? Well, interesting, the S3 is the kind of top of this range. So you could argue a bit of confluence there. But I just don't see it from a trend point of view. I don't see us coming down and dipping down into this S3 region. As I say, I think we're bullish. I think we're going to be held up by the lower median line of this pitchfork. I just don't see us dipping down into this region here. I just think we're going to start testing the R3, which I don't think is going to offer much resistance. But the R4 certainly could offer some short-term resistance. But ultimately, over the year, I think it's going to be a very bullish year. Maybe once we top out and hit 200k, you can get retests of these significant R3 and R4 levels. But yeah, just one step at a time. Short term, there's a good move into 132k. So yeah, not a huge amount I want to really add there for Camarilla pivots. RSI is the next thing I want to address. So I've got the chart here on the linear scale, and then we've got the RSI. We're on the monthly time frame. That's where we can probably best analyze this, looking at the previous peaks and how high they come up with regards to the RSI. This is crypto. Don't forget, this is crypto. It's not a conventional stock. It's not a conventional commodity. It moves in its own way. Okay, it does these parabolic, absolutely ridiculous moves that will surprise anyone when they make their highs. Okay, they'll make headlines again and again, and then they will absolutely capitulate, like 90% retracements and last years, whilst they consolidate and wait for the next big, huge parabolic surge to the upside. And when they make these parabolic moves, they hit RSI levels in the 90s. Okay, so here we have an RSI of 96. The first one was back here. I'm going to ignore this one because it was early for Bitcoin, and I think there's a lot of anomalous data back here that's not particularly significant, but that was off the scale. That was almost 99%. This is the first key one I would take consideration of, 96%. Here, again, 96. Bit lower here, you can see us trending down here. Okay, so even if you're following the trend line, you can appreciate we're still going to come into high regions. So this one only coming into around 92. So let's say we don't get into a 96. We're still looking very likely, if we're just going to stick to the nature of the beast here and expect Bitcoin to make another huge parabolic move, as it always has done, we can expect it to get to at least 89 here on the RSI if we're just following the downward trend line. Okay, so as you can see, there's a lot of space to the upside left on the table here. Okay, so this is the big point I want to address here. Imagine smart money clearly just coming back to this chart on the weekly. Smart money was obviously gathering their orders here, and you can argue some profit was taken here. But is this a place for capitulation where smart money is just going to take all of their positions off the table? Or is there more upside on the horizon? And so as far as I'm concerned, I don't believe we're considerably overbought. I think it's a reason for a bit of a cool off just going into the Trump inauguration, because it's that period just before the inauguration where there's going to be a lot more tension and potential hiccups, especially with the sentencing coming out. Previously they queried, could he even face prison? So yeah, I can understand the markets wanting to wait a little bit before resuming the upward trend, but there's a lot left on the table that is just not going to get ignored as far as I'm concerned. So we've consolidated all this time. This does not look like the effect following this cause. I think the effect is going to be followed for much, much longer. We've not even kind of refound the median line of this trend. Forget the upper median line. We've not found the median line yet. Okay, so there's a lot more left on the table here, and the RSI here further demonstrates there's a lot more upside left on the table. Once we hit this point here, yes, we can expect some weakness. Not necessarily the top. You can see here, we make this peak, and then the RSI only coming to this point with the next peak. So we make a new all-time high, whilst the RSI is still struggling to get above 70. So once we hit this point, it's not necessarily the all-time high, but it's a place that I would want to get out of any altcoin. Yeah, altcoins very likely will peak once Bitcoin hits this trend line. Okay, so that's a point where I would want to get out of altcoins. But Bitcoin itself could certainly make another big move to the upside after hitting this downward trend line. So that has pretty much summarized a lot of reasons for why I'm bullish. This is the trend line I'm following. The confluence to the upside, we're looking between the upper median line and the trend line. I've mentioned the major Elliott wave count. I've mentioned the fundamentals. What else can I talk about? So not a lot for Bitcoin. There's not a huge amount more. The next bit I want to address is, as I mentioned, the Bitcoin dominance chart. This is a pitchfork that's followed the trend for Bitcoin dominance for the last 2 years. Okay, very solid trend, and it's actually a kind of a correction of this huge move down. Okay, now interestingly, if we go on you can see the fib retracement from the high to low here. It's only on the linear scale that I believe it's significant. Okay, because if we come on the linear, you can see we hit the 0.618 very, very nicely. So we've hit the 0.618. So a lot of algos obviously getting triggered by that, whether it's the log or the linear scale, it doesn't matter. You've got different algorithms for different scales. So it's significant. Hitting the linear scale 0.618 fib is important. And then we've got the loss of this trend that has lasted 2 years. Now, this is an adjusted pitchfork. This is something that takes a lot of explanation for. It's not ideal. I do like to have all the key swing highs and lows as part of the pitchfork, but if none of them are providing a suitable pitchfork on the original shift or modified shift pitchforks, then we allow for what we call an adjusted pitchfork, where we're essentially looking to hold the price action without giving any bias. Okay, and again, requires a lot of explanation, but ultimately this pitchfork was lost at this crucial point. This crucial point on the, let's get rid of that, on the crucial point at 27th of November. So yeah, as we kind of the same month just after the election result, we broke it here. This was the first sign of weakness in Bitcoin dominance. Big surge down allowed alts to recover. And then you can see a huge correction with the Bitcoin dominance, allowing Bitcoin to show some relative strength again. But it was only as far as the underside of the trend that had been very significant for the last 2 years. And then we're resuming the downward trend. And this move up, I had it as a wedge on Bitcoin dominance, 5-wave-ish move. You can usually label it as a WXYXZ. So a WX, sorry, better go down the 4 hourly. So WXYXZ. And now we're rolling over once more. Okay, so pretty much the explanation for why you want to be in altcoins right now. Okay, so that is where the opportunity is. I think it's absolutely lucrative. You've got to remember, and this is where we'll pull up the Dow Jones, the kind of economic backdrop, not economic, but the kind of situation we are in. Okay, this, I'm going to go on the linear scale. This is the stock market, yeah, the Dow Jones. Let's get rid of all the annotations so we can just see we are literally climbing a wall. That's how vertical we're going. We talk about crypto doing crazy things. Well, if you look at the Dow Jones on the linear scale, so the normal scale, over a long time period, you can appreciate this is a bubble, okay? And the higher we go, the more risk there is to the downside. And so the more edgy people will get and the more volatile the market gets. So when people get scared off, they get very scared off. And you'll see these huge dips. Okay, so I expect huge bits of volatility, but the question is, have we topped out? Because bubbles can keep, expanding. Are we ready to pop? And my answer to that is no right now. I believe there's more money left on the table and we're going to keep going even more vertical. This is parabolic. It's only going to get steeper and steeper. So we are going to see, I believe, the biggest price moves ever in history. Okay. It's going to move faster than ever, and the eventual pullback will be bigger than ever. Okay, everything's going to be exaggerated, as it always has been, and will continue to do so. So that's that in a nutshell. Essentially, ultimately, there is a very significant Elliott wave count to all of this, and a very nice pitchfork also. So we've got a wave 1, a 2, a 3 into our stagflationary 60s and 70s, ending with a kind of expanding triangle here, megaphone pattern, whatever you want to call it. Wave 4 finishes here. Then we get a very, very extended wave 5th, where we got a wave 1, 2, this is a 3rd, and then we have an expanded flat 4, finishing with a financial crisis, and then we go into a 5th of 5th. And even the 5th of 5th ends in an extended 5th. So that's a 1, 2, and then a 1, 2, 3, 4, 5 to make the end of the 3rd of that 5th of 5th. And then we get again, it does like to make these megaphone patterns. Yeah. As you can see it here again, or expanding triangle, whatever you want to call it. And then we're getting the 5th of 5th of 5th. Okay, which is, I believe, an ending diagonal. So it allows for these really kind of drawn out moves. So we've got a wave 1, a 2, we're going into a 3rd, a 4th, and a 5th. Same ending diagonal I've got plotted for Bitcoin. So I believe we've got another strong move up here. We're then going to get some turbulence, but I believe it will have the strength to make another further upward move. But ultimately, we want to see this upper warning line get hit. So I believe these are going to be absolutely astronomical moves each time we make these moves up, because we're on the log scale here. But I do believe we've got lots more upside to establish. Crypto, obviously known to make parabolic moves. So this is a bubble, okay, first of all. So we've got a bubble here in our conventional stock markets. Then we've got Bitcoin, which is basically known to make bubbles and pop, bubble, pop, as it makes parabolic move again and again and again. So that's a bubble in a bubble. And then you've got altcoins, which are even more bubble-like. So you've got a bubble in a bubble in a bubble, okay? And my best interest is in Doge, okay? That's what I cover as I'll change the altcoin of it greater interest, which I cover in Cryptology each week, but that's where I believe the greatest opportunities are from a fundamental point of view and a technical point of view. It's got the best setups. Just recently we've spoken about how, let's get on the 4 hourly and look at what happened here. So just recently, so we had this pullback, about a 45% pullback, going from 48 cents down to 26. 3 wave-ish move, shift, pitchfork, nice impulsive move off the lows, gone sideways, and it was when we broke the downward pitchfork upper warning line that allowed price to start really picking up in a kind of motive wave format once more. So yeah, but if you only look at what happened in I think January 2021, it made a similar 50% pullback, getting ready to break the all-time high. And I just believe it's history repeating itself. I think it's got wonderful prospects. Yes, it's a meme coin, which basically means it moves in these exaggerated ways and then will obviously pop in an exaggerated way. It's got the endorsement of the richest man in the world. Potential for X payments to adopt it. Who knows? That's all speculation. But the TA behind the chart is fantastic. And I look at that in the long-term analysis also. That I have reserved for the group, which I do obviously a weekly video for. So you can obviously find information on that in the description to this video if you are interested. As I say, I believe we're in a bubble of a bubble of a bubble when we trade any of these altcoins. I don't know if how long these opportunities will be around once we top out in the Dow, and yeah, it's not really an opportunity to miss, I don't believe. But risk should always be mitigated. You have to have your invalidation points. But yeah, there we have it. I've given my views on Bitcoin, on a little overview of the Dow Jones, what I think about altcoins. That's where the opportunity lies, where the invalidation point is. There's not a huge amount further that I can add in this video. So we'll see how things play out. Expect volatility in the run-up to the inauguration of Donald Trump. Yeah, it's always going to happen. But don't lose sight of the overall goal. All right, guys, we're going to wrap it up with that. Take care. Thank you for your attention in watching through to the end of this video. Now, I know there's a lot of you watching that would like to learn how to confidently trade the financial markets independently, and I also know how confusing this can be regardless of how many stressful hours that you put in. For that reason, I've put together all of my trading knowledge in a complete course titled The Works. The Works consists of thorough and jargon-free lessons broken down into a comprehensive curriculum, providing you with a holistic understanding of the markets and giving you an accelerated journey to being able to analyze and trade the markets all by yourself. And for those of you that are looking for my weekly detailed video analysis on crypto and stocks, then there's Cryptology, which is a subscription that will also give you access to the Works while subscribed. For more information on what's included in the Works or Cryptology, you can head on over to wave618.com, or alternatively use the links in the description to this video for a limited time 50% discount offer. So I hope to see you on the other side, but in the meantime, if you would like to sample some of my educational videos, then you can check out these videos that you can see on your screen right now. Thanks once again, and until next time, take care.